Welcome to another episode of the Independent Finance Brokers Forum podcast. I'm PJ Patterson, the chairman of the IFBF, and I'm here with Daniel Sciberras. Is that how you say your last name?
Yep, that's it.
I got it, yes. I was looking at it and I go, how do you say this? You're a mortgage broker, finance broker, new to industry dude. So how long have you been mortgage broking?
Well, officially, that's my second year, but unofficially, fifth year. Yeah.
Okay, explain that to me. How do you have three unofficial years and two official?
Previously, I was working in a brokerage firm, helping business clients with all sorts of things business related, including their mortgages and whatnot. But I played a bit of a smaller role in the process, sort of learning about how things worked. Yeah.
Okay, so you started off working in another brokerage and decided you wanted to do this as a profession and have your own business, and so you transitioned into doing that.
Yeah.
2 years ago.
2 years ago.
Great. And how's it been so far?
It's been really good.
Yeah.
There was an initial period. Well, I got really excited. I thought, I know everything, right? As you do.
How old were you?
I was 21. Yeah.
So you're 25 or 6 now?
23.
20.
When I started, 18.
Oh, I see. Right. Sorry. 2 years in. Yep.
Yeah.
Got it. Got the math now. It's been a long day.
Yeah. But yeah, making the move at 21, I was like, I know so much about the industry. I'm going to go in, going to make $1 million. It's going to be super easy, right? And then I got some really quick reality checks.
What was one of those reality checks?
One thing was in relation to the cash latency period in the industry, right? You're going to go meet a client, they're going to like you, you're going to like them, and you're going to decide, hey, let's do some work together. But if it's a purchase approval, you guys are going to start the process, assuming it's all, they're ready to go right now. You guys are going to start the process now, and then a few weeks are going to go by. Sometimes you get the approval within a week, 2 weeks, but there's a bit of a discovery period, and then you're going to go and get identify the lender, lodge the application, get the approval. Client's going to have confidence to go out on the weekends and do some shopping. And particularly with first home buyers, that doesn't happen the same weekend. That doesn't happen within a month. Sometimes that can take a few months. So starting out, that was one of the bigger challenges.
So this challenge you're describing is the cash flow problem in mortgage broking, which is you could see a client, get an approval within a month, and then it takes them 6 months to actually buy a property, and then another 42 to 60 to whoever, who knows how long to actually settle it, and then another 30 to 45 days for you to get paid for all that work that you did. That's what you're talking about, isn't it?
Yeah.
Yeah.
And there's plenty of occurrences where, in that initial 30 to 45 day period, you're like, where actually did the money go? Because for some reason it hasn't made it my way.
Yeah.
And then you've got to try and have those conversations with the lender too, and figure out what happened.
Yeah. Welcome to the world of mortgage broking. So how did you, obviously that was a bit of a shock to the system initially, was going from a regular paycheck to the cash flow ups and downs of starting off a mortgage broking firm. Well, how is it going now? Have you smoothed that out? Is that smoothed out?
Yeah. Now we've got, I'll let you finish.
Yeah, I was just going to say, well, and what has caused that to smooth out?
It's been a few things. A lot of it is, I think, just down to the main factors I'd say would be tenure. So being into it for quite a while, or a good little while, you get a good lead flow and a good sort of deal flow. So after you've been doing it particularly in that second year, you've got people that are or clients that are at all stages of the process. You've got clients that are in their beginning stages that are thinking if property is right for them, and then you've got clients at the end, right through, that are just about to settle. So in that second year particularly, or for me, it probably took about 6 months to take up till I had a bit of consistency, where at any one moment, I'm now dealing with people that are settling, I'm dealing with people that are putting offers on the property that have a pre-approval, going a little bit back as well, or going a little bit forward, people that have put the offer on the property and now we're just trying to get the final part across the line, all up to people that are thinking if property is right for them and want to understand their borrowing capacity.
So this would be, the way I would describe this, that you filled the pipeline up of at all stages of deal flow and deal timing, such that every month you've got a settlement that you're getting paid on. Is that an accurate description of where you're at the moment?
Oh, 100%.
And it took you, are you saying it took about 2 years to get to that point where the pipeline is consistently got settlements happening and you're getting paid every month?
It's a lot healthier in the second year. I want to say it was about the 7th to 8th month mark where we consistently had a settlement each month.
Mm-hmm.
But yeah, leading up to that, there were a few months where we were either getting nothing or we were getting a little bit of trail from some of the first loans. But yeah, at that 7th, 8th month mark is where we had consistent settlements each month. And then in the second year, you start to get some, well, at least I've been very fortunate to have the people around me that have helped me get there, where now we're getting far more consistency where we've got a few deals that are settling each month.
Yeah, fantastic. Well, that's good to hear, because I think, small businesses, it's a very known statistic that it usually takes 2 to 3 years for a small business to succeed. And it sounds like you got over the hump, even a little bit quicker, which is fantastic. Do you have other friends or colleagues or peers that have gone into mortgage broking that maybe have not had that experience and maybe have left or are struggling at the moment?
Definitely.
Yeah.
There's quite a few people that have been in one profession for quite a while. Particularly, I've seen this with accountants, where they're in the accounting profession and it's sort of doing well for them, and then they try to add on mortgage broking as like a bolt-on service to what they're doing. And mortgage broking is not something that can be started part-time. Once you've got a team, the team understands how it all works, there are some opportunities there to sort of step back a little bit. But in that, particularly I was very fortunate to have those first few years where I was learning about the industry, learning about the credit processes. How does the funding streams work? What is the RBA? How does the RBA influence if I'm going to have clients next week or next month, right? So there was so much that I was learning, even about property investment as a whole, because you've got to understand the buyer psyche a little bit, right? How does the buyer think in relation to making decisions based on tax? If I'm not a tax advisor and I don't give tax advice, but if I can understand a little bit as to why clients make certain decisions, that can help me suggest lending products that make sense, that are appropriate, right? So there's such an initial period of knowledge that needs to be accumulated before you can start really flowing into earning. And people that are trying to do it part-time, it's so challenging. We're not even talking about lenders' credit policies. Thankfully now, there's some tools to help with that, but even still, if you're looking at a 1 year's financials product for a specialist profession, trying to identify who's offering that and who's offering that right now, who's always been prominent in that space. So I've seen a lot of people that are starting out, particularly coming from another profession. I've even heard of people that do Uber driving full time. And they're doing Uber driving full time and they're trying to say, I'm going to start a broking on the side. Or it's very common with bankers. Some bankers sink straight away, some swim. And then a couple of months later, they've gone back to the bank. Just because there is a lot that you have to learn, and that cash latency period in those first sort of 12 months is a lot more than people expect. People think you settle, get one deal a month.
It settles, I get paid, and off we go. There's a few things to unpack there that I think would be really good to have a conversation about, because it's been 25 years since I started my business, so I certainly don't have the same challenges that a person like you who's just starting out has. But the first thing I want to pick up on is that comment about being part-time. I've seen this over the years. I know a lot of my similarly experienced colleagues, when we got into it, we didn't have Uber, but they were taxi drivers, right, who were trying to give you mortgages. And you just go, what are you doing? I'm in a taxi. I don't need a mortgage as well. And I guess to pick up on that comment, so it sounds like you would suggest that if you're going to join this as an industry, then it needs to be your full-time job. Is that a fair 100%. Assessment or comment?
There is such delayed gratification in mortgage broking where people grossly underestimate the amount of effort needed until you get to a point where it can replace a standard salary. Because anything up until before that, and the more time you put in, the shorter that period. If you're working silly hours over a long period of time, at that point, it's not almost guaranteed, but it's unreasonable for you not to succeed, right? But if you're trying to do it part-time, that period blows out to 3, 4, 5 years before you can start to replace something.
And okay, so that's the first thing. And I think that's a really important message to put out there to anyone who is thinking about getting in this industry, especially considering that the saturation level now in the industry is around, I don't know, the numbers vary, but let's say 75 to 80% of mortgages now are written by a mortgage broker. So there's a lot of them out there, and we're all competing for a similar size pie. Like, I don't know that the market's necessarily growing, at least in the residential space. There's other places like commercial and a few other things that I think are growing for brokers. That was the first thing I want to unpack, and I'm trying to remember the second thing. It is that it's been a long day. This is my, as we record this is my 5th interview, I think, today. So the brain is starting to fade. But the other thing is that, and I love the fact that you did this, is you started off working for a brokerage for 3 years and really learned how the industry, did you learn how the industry worked by working for a brokerage for 3 years? Do you feel like you came out of there, with a running start?
Oh, definitely. I was very fortunate, even lucky to have had a chance in the industry at 18. And to have someone take me under their wing, train me, and then also exposed me to all different types of finance. Because a lot of, particularly if you're working in the bank, right? If you got a job in the bank, what are you going to be doing your first year? Let's say you come out of uni, you got your degree, some accounting degree or some degree that's going to help you when you work in the bank. What are you going to do in those first 12 months? You're going to have a very specialized skill set for the bank's processes and procedures on how to deal with that one thing. And let's say if you went into a larger mortgage broking firm as well, they're going to have really good systems and procedures where when you start with them, you're going to have that one little part of experience. Because that's how you have a really profitable company, right? You have it so systemized where people can come in and they just have to do one role or just a small subset of tasks and just nail those tasks. Because I went to a bit of a smaller brokerage that was doing a lot, right? We were doing business finance. We were doing, we had some clients that had quite large property portfolios that we were doing the residential mortgages as well as commercial mortgages for them. We're doing asset finance. We're doing trade and invoice finance. We're doing developments. So working in that small business, being able to literally sit around a boardroom and have everyone go around talking about the deals that they were doing, that exposure is invaluable. They couldn't have got that exposure anywhere else to understand how does asset finance work? Who are the lenders in that space? What are the income requirements? What are the document requirements? How long does it generally take? How quickly does it move? What are the client's expectations? You can't learn that stuff from a textbook. You have to learn that from being in there, hearing the conversations, hearing the frustrations, and working for another broker to be able to get that exposure into all those areas was invaluable. I wouldn't even be 10% of the way where I am now if I hadn't have gone through that.
So it sounds like you're saying that if you're really, maybe even at the age that you were when you started, 18 to maybe 25, even though you're 23 now, maybe in that age group, right? And you're thinking about getting into this industry, work for maybe a small business that's established and can actually afford to pay you a salary, because you're going to learn more about mortgage broking than you would if you joined a large bank or maybe even a large brokerage where you have a very specialized role and you don't get to see all of these things. Is that a fair summary of what you just said?
100%.
Okay.
I'm sure you've come across plenty of people that have been working in the bank for 30 years, starting out as a broker, and then now they've like, oh, okay, there's a lot more that I have to learn here.
I think the biggest challenge that a lot of those people have, and I have known a number of them over the years, BDMs who go, oh, this broking thing, what's so hard about it,
Yeah.
And it's not that the job is hard. And I think you've nailed it. It is the cash flow problem. Is you go from being fully employed, having super paid, having vacation days or holiday, sick pay, all this stuff, a desk, everything, and a set regime. You get up every morning, you go to work, you do your job, you have lunch, all that, to nothing. You are the master of your own destiny, and that can be challenging and daunting. And if you don't have a pipeline of potential clients, you're soon going to find that whatever money you may have saved to tide you over is gone in a flash, and you have to go back to working. So it's a very common tale where a lot of people will start off in a professional role, transition into broking because it's easy, and then go, it's not easy, I'm out, and go back to doing something else. Very, very interesting. So what do you think was let's maybe say one or two things. What do you think the two main things were that when you came out of that brokerage firm that set you up for success? So what are those two main things?
First thing definitely would be getting around a community that's been there, done that. Like for industry requirements, I had to get a mentor, right? And at the time I was thinking, oh yeah, I need to get a mentor. They're going to help me sign some paperwork and that's about it. I pretty quickly learned how much value there was in getting a really good mentor, because I was learning so much, not just how to, do the loans and figure out the spreadsheets and all that sort of stuff, but real business mentoring and business advice too, on how do I look after my time? How do I protect, my time? How do I serve the clients best? There was so much involved in that. But then getting around a community that has been there, done that. So one of the really great things about going to the IFBF meetings is, and I literally tell this to everyone, there are people there that have been in the industry since 1970. How invaluable is that? Someone who's been in the industry for 55 years, they would have seen it all. They would have seen all of these new schemes that get, introduced by the banks, and how some of them quickly rise and some of them quickly fall. They've had challenges receiving payments from different lenders. They've gone through things about how offset accounts don't work at times and how we've got mixed up in it. There's things about, foreign currency loans and all this stuff that people have been over the years. Because there's a lot of red herrings. There's a lot of, not red herrings, but shiny objects, particularly with policies that get introduced. And you can sort of get really excited because one lender's doing, 98% this, blah, blah, blah. And then you realize, oh, wow, that's a whole other thing. And then there's all these extra conditions and no one tells you about this stuff. They're not putting it on their promotional material. You just need to find this out through people that have been there, done that. And particularly people that have had large brokerages or currently have large brokerages or are specializing in one subset of commercial lending and have their processes to be able to deal with that. That's been invaluable. Just hanging around people that really understand the game and learning from them, asking questions, being really like a sponge, going up and just asking everything you can and taking a genuine interest in people has allowed me to learn so much about the industry and around the business side of, staying commercial, staying viable. That way, because it's like a bit of a seesaw. There's people out there that don't look after their client, or not that they don't look after their client's interests, but they prioritize their own interests very heavily. And then there's people out there that prioritize the client's interests so far beyond themselves that they're not in business in 6 months or in 12 months. And you need to find, one of the massive things that I had to learn really quickly was having the client's best interests at heart, but also respecting my time. Making the clients do the work to be my client. Instead of, me dropping and, oh, it's 11 p.m., my client texted me, let me quickly reply. Because I was doing that at the start. And then, that really built up once you open the envelope, it's like, how far are you going to go? You give them an inch, how far are you going to go?
Well, the problem with that, of course, is when you start that, then they expect it. And I love that you've said you've got to set some personal boundaries, well, professional boundaries really, because, texting at 11 p.m. back to a client is not okay. You should be asleep.
Yeah,
right?
100%.
Resting up for the next busy day you have ahead of you. Okay, so the first thing was a mentor and getting around someone or a group of people that can mentor you. And of course, the IFBF is very much into mentoring and helping the next generation of mortgage broker be better and the current generation of mortgage broker be better at what they do. What's the second thing?
It sort of ties into that, right? I don't think you can ever have too much knowledge. I don't think you can ever have too much.
Well, you can never know everything, so you can never have too much because you can never know everything.
100%, right? So it's getting education surrounding that. And some education in the industry is incredible, it's excellent. It's also looking to get education from other sources too, because there are people that are so specialized in one particular thing that it's a no-brainer for you to try and learn a little bit from them and do them. Whether it's going and learning about, this whole industry requires you to have so many different hats. Like, to get the client, you need to be very personable, very sociable. You need to be able to connect with people for them to trust you, because it's an important thing, right? That is a very different hat that you need to wear to someone who is assessing business financials. Like, go and talk to an accountant and see how sociable they are, most of them, particularly the ones that are looking through financials all day, every day. Like, yeah, try and open up to that person about your dreams.
That's your second dig at accountants today. I'm not an accountant, and I certainly echo some of those sentiments, but we love accountants. They serve a very valuable purpose in what we do, because without them, we don't have financials to give to clients. So we love you, accountants.
We do love accountants. It's, not meant to be a dig, but yeah, definitely. You've got to be working with great
Just
accountants.
a truthful, accurate observation of most of that profession. Yes, gotcha.
Yeah, like, you got to be working with great accountants that understand where the client currently is, but also understand what the clients want to achieve. That's one of the biggest sort of challenges that I've found, which brings up this.
Sure, it's a frustration. I get it. I know exactly where you're coming from, and that is a frustration that'll probably never go away. And it's a good observation too, from such a young to industry person, to recognize that. Yeah.
Thank you.
Sometimes accountants don't actually, for whatever reason, they just don't think about the future of the client. They're always looking 12 or 18 months in the past, and that can be frustrating. Tell me where you're currently, so is there an area of specialty that you currently have in your broking business? Like, do you have a specific type of client that you're looking for?
Definitely. There's... Jury style.
Everybody has an opinion now.
Yeah.
Even the people from behind the camera.
I'm going to do it again. So we're predominantly working with investor clients.
Okay.
So our core sort of mission and what we're trying to achieve is that we're really in the business of helping ambitious Australians live the life they truly want to live. So our goal is to help our clients reach their goals, right? But a common theme amongst our clients is they all generally want significant and profitable portfolios.
Property portfolios.
Profitable portfolios. So
Profitable.
yes. So
Okay.
not just within the realm of property. So there's like sort of two core divisions to what we're trying to achieve for these clients, what we are achieving for these clients. The first division is very heavily focused on property portfolios. So we're seeing a lot of lending inside trust structures, company structures, to help people acquire lots of assets. And some of those people are primarily starting out with residential assets, and then generally the themes that we're seeing is once they get a few residential assets, we're helping them go into that sort of next level where they're looking at commercial assets or assets that have a bit more risk with a bit more return. And then the second arm of the business that we're seeing right now is people that are getting involved a little bit more into private equity. So they're building, I've joined some sort of business networks, which has really prompted this, but they're looking to acquire multiple businesses, and then they're seeking finance to be able to do that. So it's those two arms of helping people get profitable, property portfolios, but then also essentially, their own business portfolios or, little private equity firms.
Okay. So the lending that you're doing, because you're at the end of the day, you're writing lending for this, right?
Yeah.
Is investor loans for investment property purchases, and then maybe in the business realm, trying to get business financing from banks or non-bank lenders or whomever. Yeah, is that kind of the two? Have I summarized that well?
Yeah, to a degree. It is quite a wide scope because on the property portfolio path, we're doing a lot of investment lending for residential property. We're doing investment lending for commercial property. We're helping clients do developments, whether it's residential or commercial developments. That's all sort of within the property space. And then on the sort of the business financing path, that's a whole can of worms because every deal is so different, right? With some deals, we're involving business line of credits as one of the ways that we can fund the deals. In some, we're leveraging against the receivables ledger to do some type of trade and invoice finance. In some of these, we're saying, hey, why don't we sell some assets that are within the business to pull some cash out, and then we can look at replacing those assets. So the business lending is very exciting because very creative, and you've got this whole repertoire of possibilities and skills, and then you just sort of have to look in your toolbox or your tool bag and say, what tool do I want to use today? Or what tools make sense today? And then suggesting those to the clients and seeing what they feel most comfortable with.
Well, specifically around the business finance side, right? Because that's not something you hear every day. That's something that, most brokers are resi, investment, PPOR, principal place of residence, a little bit of commercial, maybe the odd asset finance deal here and there, maybe the odd personal loan here and there, and that's about it. And yet you're here saying, actually, I really enjoy doing this business lending stuff, and even more specifically around that sort of PE or private equity type thing. So what drew you to that part of it? How did you get more looking at wanting to go down that path and looking for clients in that space?
It may be being a young lad, but at this current state, I am filled with ambition. I'm hungry out there to go and grow a brokerage. And then I'm naturally being drawn towards people of a similar nature. When people are coming to me sort of saying, hey, my interest rate is X, can you beat it on my home loan? I don't get excited. I turn a lot of those clients away and say, yeah, we could probably knock it by 10, 20, 30 points, but I'm not that interested. It's a very common conversation that we're having, because I like working with people that are looking to really grow and build something significant. So it's really just an extension of how can I further support an existing database, leveraging skills and experience that I've gotten before. And then I'm also involved in a few of these networks where I'm seeking a lot of this education around, creatively growing businesses. And there's many ways of financing beyond debt financing, right? Being a broker, the only thing we really know is debt financing, loans. But there's many other ways, particularly with corporate financing, where they're raising equity or they're doing commercial exchanges of things. So being able to work closer with people that have that stronger sense of ambition, that are looking to grow something in the arms of business, there's just such a natural click. That's really it.
Yeah, I think that's great. I mean, you've identified what you've just articulated is a niche, right? And I think having a niche in any profession is important, right? That's why a lot of doctors, for example, you have your GP, of course, and there's plenty of them out there, but then you have a lot of doctors who specialize in something because they know they can make more money, and there's a smaller pool of those guys. So it's great that you're actually looking at doing that. Would you encourage new to industry people, or maybe even people with 5 years or less, to consider specializing in some way, shape, or form in a particular area and seeking those clients?
Hands down, 100%.
Why?
Pretty much like you just said. You get to work with a target market who you naturally connect with, and maybe you've curated the market, but it's working with a subset of people. And I think a bit of context required before I sort of go into this. There's many different ways that you can niche. You can niche by demographic, in sort of working with older people, younger people, people of just got married, newlyweds. You can niche by ethnicity. Some people that have a connection to another language or another culture. Very easy to connect and niche in that way. And there's a whole other, I've just spoke about essentially a value, right? Ambition's a value, right? It's a connection of a certain people that are looking to do a certain thing. So there's many different ways that you can niche. Now, the reason why I'd recommend you can niche is it's so much easier to market a niche than it is to just say, hey, I'm a broker. I got this expression I use it for just about everything. It's almost like my Pareto rule. It's like throwing cupcakes at a wall to see if they stick. If you're not niching, you're just putting yourself out there and saying, hey, I offer loans. Who wants to come and buy my thing? Who wants my service? Doesn't really work. But then if you switch that to, we're the guys that help ambitious Australians, build significant and profitable portfolios to live the life they truly want to live. It's much more of a deeper connection that we have with the target market. And yeah.
Great. Sorry, I was just taking a breath in. Keep going.
That's something there. I've got to see if I can remember it now.
Maybe I'll come back to it. What I was going to say when you finished that was simply that, first of all, I think it's amazing that you have identified that niche. And I think the lesson here, again, and this goes for any level of mortgage broker, is, and you nailed it when you said that if you just are out there saying, I'm a broker, no one knows what you do other than, I guess you can get me some money. But if you have a very specific target and you say, I'm looking after doctors or lawyers, or even you could go one level down in the doctor realm and say, I only look after brain surgeons. I mean, I don't know how many of them there are in Australia, probably not too many, but I reckon they probably have some pretty big property portfolios. So, that's really cool. And it's something that I talk a lot about with, well, anyone really, but certainly new to market or new to industry people. Have you found that, now you already did say a moment ago that you do turn away some business, but have you found that expressing a niche has stopped you from getting certain types of business?
Yeah, and it's incredible. It's awesome. How great is it that I can attract people that I want to work with and repel people that I don't want to work with? It's no secret, clawbacks. You tell everyone, if you're helping someone achieve a thing and they have a particular interest that doesn't really excite you, you can't be super sticky with the client. And if you're not really sticky with the client, it's not just a nice to have, a niche, it is a necessity. It's crucial, because if you don't build almost like a cult following surrounding your thing of, this person is incredible at, helping X demographic achieve Y result, if you don't build that, you've got such a high exposure and risk to clawback. And there's cash flow reasons why that makes a whole lot of sense, as well as business valuation reasons.
I think that's a really wise observation. Kudos to you for doing that.
Thank you.
I wasn't actually expecting you to say some of what you said, and as I was listening to you articulate that, I thought that's really actually a very smart way to look at it. Again, especially because this industry now has become so saturated with people just going, I'm going to be a mortgage broker, tomorrow, and trying to make their way in it, as opposed to, whatever your particular tagline is. You've said it a couple of times. I should write it down. But helping ambitious Australians achieve their ambitions, I guess, is a very unique thing to say. That's really good. So well done. Well done on that. I'm trying to think. Gosh, my brain is actually starting to really fizzle and fade. So we've talked about having a mentor. Where do you see yourself in the next 5 years with your business and with your evolution as a mortgage broker? Because you're only going to be 28 in 5 years. So maybe let's even say 7 years. You're going to be 30. So by the time Daniel is 30, where would you like to be in relation to your career, mortgage broking, business, etc.?
Let you know a little secret. I don't really like to look too much more than 3 months ahead. I know I've got a North Star of what I'm pulling towards, but I don't really focus too much on it, because I've found in myself, whatever I tend to focus on, I tend to really focus on, and then it tends to consume me and absorb me quite a bit. So if I'm focused on wanting to achieve this big, hairy, audacious goal, 5, 7, 10 years down the track, it's very easy to get into a bit of black and white thinking of, oh my gosh, that's so many steps away for me, and then to obsess over it a little bit. So I actually don't really like to look far more than 3 months ahead. If I were to put something to it, I'd say we've got a really strong team in 5 to 7 years. We've got a really strong team.
What does that look like? How many?
From what I've seen, some really good org charts, you probably need about 8 people.
I'm not talking about out there. I'm talking about right here. What would you want to have on your team?
Yeah, right.
Putting you on the spot. That's okay. If there's no answer, there's no answer. But
I'd have people that are at sort of different parts in the process that are managing, I can't wait until I get a settlements person.
what's stopping you from doing that right now?
Oh, we're getting there. We're the job ad's not too far from going up.
Okay.
So we're getting.
So you're at the level now where you have the cash flow and everything, and the business is to the level where you think you can add on that additional team member.
Yeah.
So a settlements person, tell me the reasoning behind that particular skill.
Well, anyone that's ever dealt with me knows that I am not a details person.
You're an ideas man.
Yeah. No, if we're talking about spreadsheets and numbers and you want details, I will give you details. If you want me to remember your loan account number, that's not going to happen. Or if you want me to figure out, one of the biggest challenges that we have and the most annoyances that I have to deal with is we're working a lot with financial institutions, and financial institutions who are not ADIs, not banks. Most of them, from what we've seen, don't have the authority to set up an offset account until the loan is settled, because the offset account is held with a major bank or held with the bank, right? So one of the biggest annoyances is that most of them cannot sign or they cannot make the direct debit account, the offset account, prior to settlement. So we've got to just put any account there, convince the client that, hey, it's going to be okay, make sure you've got enough money in this account, and then we've got to settle the loan and then change it to the offset account. So there's like 3, 4, 5 steps in that process, right? Doesn't sound like the end of the world. We worked with quite a few clients over the last few months where we're doing 3, 4, 5 settlements simultaneously. That is not fun, because that is no less than 45 minutes where I have to sit there, go through the accounts, the phone's ringing all the time, other stuff to do. I literally, one of the best things is just have someone in there who's detail oriented, who will handle the settlements, handle the logistics, have the conversations with the client surrounding, hey, they're not an ADI, they can't set up the offset account, because for some reason there's a massive point of frustration with some clients too, right? Having someone else to be able to handle that and then deal with them post-settlement to help them change that and give them the confidence that it's going to be all good. Because then again, sometimes banks make mistakes. So you've got to tell the client, by the way, it's not a bad idea to have a little bit more than a mortgage payment in your offset accounts. It's also not a bad idea to have a little bit more than a mortgage payment in the previous accounts that we sort of suggested. Because I've been doing this long enough to see that when a bank tells you they've changed the direct debit account, it doesn't always mean they have. And if you're expecting that first loan payment to be $4,000, sometimes it's $4,500. And then you've got to go through and become a forensic accountant to be able to explain it to the client.
So it sounds like what you've recognized is that there's something you don't like to do
100%
in the business,
and
you're going to get somebody in the biz that loves doing that. Because believe me, there are people. I'm like you. I would rather poke my eyeballs out with hot poker sticks than, probably not, but you know what I'm saying metaphorically, than sit on the phone and try to work stuff like that out. But I've hired people in my own business to do things that I don't like doing. I think that's a really good observation for anyone who's building and growing a business, is to, as soon as you can, recognize the things that you're really good at, that you like doing, and do those things, and hire people to do all the rest of it. So it sounds like you're getting to that, or you're just about to start on that journey.
Oh, 100%. With the settlement side, or having someone to manage that, the best thing I ever did was get someone as a para-broker, because it's going to sound...
Para-broker,
yeah.
So like a paralegal or para-planner, okay. And what do they do?
Going to sound really silly, but before going into that, I hate writing the applications. Like, for me to sit down and spend 3 hours moving information from here to there, not enjoyable at all. Understanding the policy, the reason why we're going to the lender, that's my thing. I want to sit down with the client, connect with them, understand their current and immediate goals, as well as their longer term goals, to have the appropriate conversations with them, to then say, hey, all right, these are the loan products that might make sense for you. And then have them suggest. That is far more exciting to me than sitting down doing the work. So yeah, we hired a para broker not too long ago, and she's been excellent, tremendous, where I could pretty much say, hey, the client's identified that we're going with this lender, there you go. And she sees it out pretty much until settlement.
That's brilliant. And so what has that done for the business? Or for you?
For me?
Clearly got something you hate off your plate.
I get to sleep.
Always a good thing.
Yeah, I get to sleep, get to enjoy my
What do you think it's going to do for the business going forward?
Well, it's already allowed it's allowed me to focus so much more of my time on growing the business. Because if you're spending 95% of your week doing the work and 5% of your week growing the business, it's not growing at nearly the rate to be meaningful in any way. Having someone in where I only have to now spend maybe about 30% of the week actually doing the work, and it's probably a little bit less than that now, I get to spend 70% of the week purely on growing the business. That's setting up partnerships with the right people. That's looking at new ways to build an education brand, an education to be able to support clients on things that we're allowed to. It's going further and understanding my own structuring a little bit better, and being able to talk with my accountant and say, hey, help me understand some of this stuff. What makes sense for me right now? Because you don't get to do any of that. Like, finance in itself is so mentally taxing and mentally draining that if you're in there doing the work, you've got very little mental capacity to do anything else. Like, if you're just constantly doing application after application, like a couple of days ago, I'm not sure when this is going to air, but we're filming this mid-September. Last week, I don't know what happened. People just turned their calendar to spring, and they were like, oh, it's spring, let's buy a property. I had like 3 people on the one day who I haven't spoken to for months said, hey, thanks, Daniel. We've sold our, well, not thanks, Daniel. Like, Daniel, we've sold our property. We've also locked in another one. And I said, what does that mean? What does that mean? You've locked in another one? And they're like, oh yeah, we put a deposit down. Like, we haven't spoken for months.
Music to a mortgage broker's ears,
yeah.
right? Yeah.
Like, we don't have an approval. What do you mean you put a deposit down?
Yeah.
And then I had another one that we were like, I had the hand up for the fourth. We were actively looking. We had one with the fourth client, and we were having active conversations with him. And I was telling him it would be a dream, because we have to go to a particular lender with him. It's going to take a little bit longer. I said, it's going to be a dream if we get your finance through in 2 weeks. It's an absolute dream. So you can get a 2-week finance clause if you want, but understand you're going to have to request an extension, and that may not be granted. You've got to talk to your conveyancer to really understand what that means for you and what you may be sort of risking. Ideally, if you can, get a 3-week finance clause, and then I'll have a greater degree of confidence. Now, I was at a seminar when I got the text from him, and he texted me like late on the Friday night. He says, it's so good, Daniel. We've acquired this property, and we've got a 1-week finance clause. So
Again, music to a mortgage broker's ears. Ignored everything you just said.
Pretty much. And I am doing a lot of like investment stuff with him, but this was for his owner occupied. So all logic and reasoning goes out the window when you're dealing with owner occupiers some of the time. So it's what we're paid to do, right?
So you have been able to leverage effectively with this, I'm not sure what you'd call them, a customer service officer or what'd you call it?
Para-broker.
Para-broker, there you go. With this para-broker, you've been able to leverage your time more efficiently to go out and bird dog for business and go and do the networking and the other events that you're attending, and work on yourself a little bit as well, education-wise, and that's been a great thing for growing the business. That's what I'm hearing you saying. Yeah,
110%. Like, if you knew everything you needed to, you'd have what you want. Like, so it's just like the last couple of months. It's going to sound silly, but like I've logged all my CPD points and all things that are industry related and non-industry related. The last sort of 4 months, I've averaged over 100 hours a month at events or learning. And that doesn't account for any of the books that I'm reading in between, right? So if I can be spending 100 hours a month learning, 100% you're going to change what you're doing next month. You're going to change what you're doing next week. You're going to change what you're doing tomorrow.
And well, just on that, because I was going to ask you about some of the things that you're doing to develop yourself. So you just mentioned a couple of things here. You're reading, obviously. You're attending some seminars and things like that. Are these industry type events, or are they other things that you go to and consume that are out there?
The IFBF in itself is the only industry related thing that I attend. I do get invited to some one-off events in relation to learn about our products or learn about the new way that we're doing things. So I go to some of those one-off events, but the IFBF is the only recurring membership or thing that I have that's industry related, because it gives me such a vast variety of content. There are some other things. So the thing that's sort of pushed me heavily into the private equity arm is being sort of affiliated and directly mentored by Aaron Sansoni. So he's got like $250 million private equity firm, and being directly mentored by him, he's sort of helped me understand how I should potentially operate things and change things a little bit.
Makes sense, given what you said about wanting to be helping people who are in that space. That's good. What else?
Yeah, and then I was one of those people that went out, read like a personal development book, and I was like, oh, I'm going to buy 50 of these and put it on my bookshelf. And then they sat there on my bookshelf for quite a while, and I was like, oh, I don't want to download any of these apps to listen to books, because I've got to really consume the content and I've got to read it. And then 12 months went by and I think I read 3 or 4 books. So then switching, I got an Audible membership and now reading 2 books a week, or listening to 2 books a week. Some things are directly related to the challenges I'm facing right now, and I can pick up on a few things, take action on those and get results. And it's so quick. It's switching from a state of perfectionism and wanting to maximize the value that I'm getting out of X to, let me just consume it, see what sticks, and take some action, because that's all it is. It's just learn, take action, learn, take action, learn, take action.
I agree with that. And a few years ago, I started listening to books, and I do a morning walk just as part of my exercise routine, and I just listen to books. Generally, luckily I don't have a big commute to my office. It's literally 5 minutes down the road from where I live, so just not a lot of time in the car to listen to a book. But for anyone who's looking to grow themselves, there's so many tools nowadays to do that, and it's really not that hard. You just have to set aside the time, I suppose, to do it, and you're doing that, which is great. And what I can tell you as a 25-year veteran of the industry and a 54-year-old man and someone who's spent almost half a lifetime, trying to improve myself, is that it compounds. It may not happen immediately, but something you've learned in one of the books you've listened to or read recently, one day it may not, at the time it may not seem like it's important, but then you'll remember that and you'll go, oh, this is a situation or the circumstance where I can actually use this knowledge. So very well done to you for doing that. And I think that's fantastic that you're constantly trying to improve yourself. If you're not working on yourself, I think you're just crazy in this world. We all need to work on ourselves. I know I need to work on myself constantly. So I think everyone else should do the same.
Absolutely everything in nature is either growing or dying. And I'm sure you've heard that before. Everything is growing or dying. And if you're not growing, so
what's the alternative? You're dying.
Yeah.
We will start wrapping this up now. Since you only really look 3 months out, that kind of didn't really help me in terms of where you're looking to be in say 10 years time. But let's come back to that for a second. I mean, now that you've had a moment for the subconscious mind to maybe think about that, is there anything you want to achieve in the next 10 years, that you can say, when I'm 30 and I've achieved this, then I know I'm well on my way to being successful, or whatever that looks like for you in life? And the answer is no, that's fine too. Maybe episode 2.
Oh,
Give you a bit more time to think about it.
there definitely are those things, 100%. There are definitely some things that are on the vision board and that are directly sort of, I know I want to achieve A, B, C, D, E. There is something around saying what you want to achieve before you say it and getting that bit of a dopamine hit. But I will give a little bit of an insight into that we are guiding ambitious Australians to achieve the life they truly want to live. So there will be sort of a future development to find ways to support that.
Great. Good. Any final comments or thoughts or words of wisdom from as much as you can have words of wisdom from a 23-year-old these days that you might want to impart on our peers in our industry?
One of the first things that I was told is be a sponge. But then to be able to do that, one of the best ways to get people to sort of open up and to share with you is to take a genuine interest. And I think that sort of note or that skill is invaluable for anyone of any age. Because there's lots of people that are very fixated or very attached to sort of showing that they've got a great tenure, or they're worth this, or they did that, or they've achieved X, Y, Z. I think if you just take a genuine interest in other people from a kind place, and even a loving place, as a result, they're more than happy to impart their wisdom upon you.
I think that's a wonderful way to wrap up. The phrase I use is be interested, not interesting. And it's the same thing, what you just said. So I love that. We'll wrap it up there, and I'm sure this will be the first of a few conversations we'll have with you to follow your career and see how everything goes. But Daniel, thank you for taking the time to sit down with me and talk about the industry and other things.
Thank you so much for having me, PJ. It's been a blast.
You're welcome.